Hi everyone, welcome back. And today's topic is Murabaha contract. And what we'll be discussing today is the detail on this contract, the accounting transaction, the basic understanding of Murabaha. And with us, we have Tayyab.
Yeah, thank you very much. Thanks for having me once again.
So Tayyab, today we are discussing Murabaha. So what is Murabaha? Like if you can give us a bit of brief.
Yes, Murabaha is very commonly used Islamic banking contract. And let me surprise you with the fact that around 80% transactions of Islamic financial institutions, they revolve around the Murabaha contract. Murabaha is very easy and simple to understand. Let me first give you a brief about what type of contracts we have in Islamic banking. If we divide the Islamic banking contracts, I can divide them into the four parts. One of them are the trade-based contracts, then some of them are rental-based contracts, then some of them are partnership-based contracts, and then finally, some of them fall under the category of agency-based contracts. So first and foremost, Murabaha is one of the trade-based contracts. Trade-based contracts, I mean sale and purchase transactions. So let me give you two very basic examples from our real life to understand the trade-based contracts and to explain the Murabaha itself. If we go to a shop, as we normally go, we identify something to purchase. The seller tells us this cost $10 and we pay $10 and we buy the commodity and come back home. This particular type of sale and purchase which we do every day has a specific name. That is called Musawwama sale. Now comes to Murabaha. Same example, we go to the shop and the seller tells us, I buy this commodity at $10, I'm charging you $2 profit and the selling price is $12. Now this is a Murabaha transaction, a Murabaha sale.
Where does the Islamic financial institutions come into this transaction? Like this is a sale purchase transaction. Like I come to you, you're selling a car and I'm buying your car and I'm like, okay, fine, here's the money, give me the car. So is it some sort of financing? How the financial institutions come into this transaction?
Actually, we are living in a complex financial world where the transaction is not simpler as I explained earlier. There are many transactions in today's world where we need banks. So we can say the earlier example we defined is called a normal Murabaha, but there is another kind of Murabaha which is called a banking Murabaha, or AOF called it Murabaha to purchase orderer. Now this is a three-party Murabaha. For example, a customer came to bank that he wants to buy an aircraft, and the bank has no expertise to buy an aircraft from an aircraft manufacturer. The airline company knows what to buy, what are their requirements. So in this case, bank appoints airline company as the agent to communicate, to deal, or to buy aircraft from the aircraft manufacturer. Now, there are two transactions which are separate and distinct to each other. The first transaction is where the customer of the bank is buying aircraft from the aircraft manufacturing company, but not as a buyer, as an agent of the bank. So first transaction, the customer is a buyer, but not for itself. It's buying this aircraft on behalf of the bank. So first transaction concludes when the aircraft manufacturing company delivers the aircraft to the bank. And second transaction, when the bank sells this aircraft to its customer. So this second leg of the transaction between the customer and the bank is called, a Murabaha sale or a Murabaha transaction. And the bank is needed because the customer has no money to buy. So bank is in fact financing, this transaction. And this is called a deferred Murabaha sale because the customer is paying to the bank, in installments and not in the one go.
Okay, so if we can, I understand that whole the differences between Islamic banking products and the conventional banking products is a huge topic. But if you can briefly summarize how this transaction is different from a regular conventional banking financing products like mortgages.
Let me first explain one very basic thing. In conventional banking, there is only one relationship between the bank or the customer. Either the customer is a borrower of the bank if he is taking a loan, or a customer is a lender to the bank if he is giving deposit to the bank. There is no other relationship. But in Islamic banking, the relationship varies from contract to contract. For example, in Murabaha, the bank is a seller, the customer is a buyer. And as we go further, we'll see every contract, there is a new relationship between the bank and the customer. So in Islamic banking, the customer and the bank enjoys a different relationship depending on the contract. And the roles and responsibilities and privileges vary from contract to contract. Let's take this example of aircraft buying, which is bought by a bank and then sell it to the customer on deferred payment basis on a Murabaha contract. In this case, we have two legs of transactions. So first leg is when the customer in fact buys the aircraft from the aircraft manufacturer and then take the custody as an agent of the bank. Till that point, during the entire period, the bank was the owner of that aircraft. If anything happens to the aircraft due to any reasons which are beyond the control of the customer, the loss, the depreciation, the amortization, or anything that happens during that period before the sale to the customer, this entire loss is for the financial institution, Islamic financial institution. And this is very unique feature. This does not exist anywhere in conventional banking, because conventional banking, when they distribute the money, the moment they distribute the money, they are not a part of any loss that happens to the customer after that. So this is something we need to understand, that this is a contract where Islamic bankings are actually taking a risk and then they're earning the rewards.
Okay, so if I understand correctly, if I go and get a deferred Murabaha from a bank facility, from a bank, until I finish all the payments, the risk and rewards of that asset that I procured lies with the bank. That asset belongs to the bank. At the end of the deferred Murabaha contract, that asset's risk and reward will transfer to me.
No, this is actually not contract. Let me explain a little bit more on this one. We have to establish the point of sale. From the point of sale onwards, risk and rewards incidental to the ownership transfers from buyer to the seller. So till the movement, the aircraft manufacturing company delivers the plane to the bank is the owner and is responsible for any risk and rewards. Once the Murabaha agreement is signed and the banks transfer the ownership from bank to the customer, then the customer is responsible. It has nothing to do with the payment.
Okay.
The payment will continue for 5 years or 10 years. During these 5 or 10 years, the customer is responsible. But till the delivery and sale contract is executed, the bank is responsible.
Okay. So now I understand Murabaha contract. Then what is the governing standard for the accounting treatment of these transactions?
Yes, earlier there were two accounting standards that deals with Murabaha and deferred payment sale. Financial accounting standard issued by AOFI, which is Phase 2, was dealing with Murabaha and Murabaha to purchase order. And there was a Phase 20 that with the deferred payment sale. Now, recently, AOFI has superseded both of these standards and issued a new standard, Phase 28, that deals both with Murabaha and deferred payment sales. So any student of Islamic finance or any Islamic professional now want to study laws governing the Murabaha contract, they have to study Phase 28, which is applicable, from the financial year 2020.
So we'll have, just for the viewers, we'll have a separate discussion on Phase 22 along with other standards. So in another video, we had discussed that all the financial institutions have to comply with the accounting standards of AOFI. And using those accounting standards, they prepare their accounts and financial statements. So this one will not follow IFRS. This one will follow the AOFI accounting standard.
Yes, Islamic financial institutions will have to follow Phase 28 while they are reporting any Murabaha transactions. And Murabaha transactions are again reported, on the face of their financial statements with full disclosure requirements that shows, what assets are there, what are the Murabaha assets, what are their inventories, what is their net realizable value, and all these subjects which relates to the inventories and sale and purchase, they all are covered in new Phase 28.
What other Islamic banking products that are based on the same principle?
Islamic banking, the contract is different than the product. Murabaha is a contract. Based on this contract, you can design as many products as you can. You can design retail products, you can develop corporate products, but the underlying contract will remain Murabaha. For example, home finance can be built on Murabaha contract. Car financing can be built on Murabaha contract. On the same lines, fixed asset purchase or working capital purchase, these are can be developed on based on Murabaha. Let me clarify one thing. Murabaha is purely an asset-backed transaction, and it's also a fresh asset-backed transaction. So any business that needs any kind of fixed assets or material, or they want to construct something, so this contract can be used in Islamic banking, and it is widely used, I must say. As I mentioned earlier, more than 80% of transactions are covered. It has some, complex scenarios as well, like the commodity Murabaha or Tawarruk, we may call them. We will cover them in separate, video sometime. But this contract has capacity to be used in development of the various products, both for retail and the corporate.
Thank you very much, Tayyab, for your time today. For the viewers, if they want to see a list of available courses or upcoming videos, they can visit our website. And if you have any questions, you can leave comments or send us an email at info@ibflrc.com. And wait for our next video, which will be, we will cover Ijara and Mudaraba in next upcoming weeks. Thank you very much, Tayyab. Nice having you here.
Thank you very much. So nice of you. Thank you.